Welcome to Founders Unplugged, hosted by Greg McCallum. Long-form, honest conversations with founders and entrepreneurs from around the world.
Hi Greg, I'm Clément Helinckx. I'm French, as you can hear. I've been living in London for a bit more than 6 years. I have been working at DLF Ventures for about the same time. So we are a consumer venture fund. We are a family-backed fund, so we are not accepting external investment, which is a bit different from the usual VC. We focus only on brands, so B2C focus only, looking at a few sectors only. So obviously food and beverage is a big one. And as you can see behind me, there are lots of brands, but we also look at wellness and nutrition as a whole, and not only about products, but also services, in person, online, that help consumers to better understand their need and to try to solve their day-to-day concerns. And yes, I'm also an angel investor on the side, which is very closely related to my day-to-day job. So obviously, it also helps to understand what the new trends are, and yeah, I think we can start on this.
Awesome, thank you. And yeah, I really appreciate you taking the time to jump on and chat with me. It's I've got a lot of things that I want to ask you about, and I have a feeling that you've got a lot that people will want to hear about. So thank you for being here. How have you been, first of all, since we last spoke? How are you?
Things have been amazing.
Yeah.
Again, it's been a really good start of the I would say of the season, because I consider that my season starts in September, which is, I would say, the peak inbound season for us in terms of entrepreneurs reaching out to us. I would love entrepreneurs to reach more during the summer, because obviously it's a big amount of inbounds that we receive in September and October. But it's the best period for us to meet new entrepreneurs, to understand what the vibe is for the end of the year. So for us, it's perfect season, and it's always a good time for us.
It's interesting because in the investment advisor space, people are always saying to founders, don't bother really with summer. It's just, there's no point. Everyone's on holiday, But I've never liked that excuse, because if in any business, there's always an excuse to not to do something, So in sales, it was always, don't bother making calls on a Friday. Everyone's doing admin on a Friday, or it would be Monday morning. Everyone's too busy on Monday morning. It's the same thing. It's just like, just do it. It doesn't matter. Cool, man. Well, look, it's really, I'm glad that you're well, and I'm glad you've been had a good start to the season so far. That's awesome. So look, before we get into a bit more about what you do, which is hugely interesting, by the way, I would like to know a bit more about how you got into doing this in the first place. How did you even get into all of this? What was the journey like before? Assuming probably a very different set of jobs before this, all right? Or maybe was it along the same sort of path?
So clearly that was one of the least planned thing in my life.
Okay.
That was, not something I had in my mind when I started my career. At the time, and talking about 12, 13 years ago, clearly at the time, of course, entrepreneurship was big. You started having a lot of venture capital funds, PE funds. I started my career in Luxembourg, looking at originally how to audit those PE and VC firms. And I think one of the realizations at the time was that the infrastructure in terms of ability to review valuation of companies, or how well the portfolio companies were performing, was, I think, very new. And I think at the time it was about building a set of tools and knowledge about how to assess those various startups that started to be in the portfolio of our clients. And so I started working on this originally at PwC, taking time understanding the dynamics of entrepreneurship, of investment, also from a fund perspective. I grew into that world, and I joined a smaller PE fund after 6 years in that space. And after a couple of more years in that fund, I joined DLF Ventures. Again, always with working closely with entrepreneurs over the past 10 plus years, understanding what their concerns were, and also from a fund perspective to understand what are the reasons why they would invest into the startups. And now I'm on the other side, so on the fund side. I think I grew this interest over time. When it comes to the consumer space, I've always been closer to anything related to consumer products and services. So I'm pretty happy I ended up into that world, and here I am. And obviously, I mean, I'm French, so food is important, beverage is important. So I think it was a perfect match.
Yeah. So when did you come straight? Did you go to university? I assume you went to university or college or something, and then
I did.
yeah, and then went straight into that role that you mentioned. Was it that was kind of what you knew you wanted to do? Was that quite a clear idea in your mind that you wanted to get involved into that space early on, or was that something of a surprise to you coming out of university?
So coming out of uni, I knew I would work in the consulting or finance services. I think that was pretty
Right.
clear. However, the opportunity I had to work in the PE and VC environments at the time was, I would say, not planned. It simply came out of discussions with partners and with other staff. And I think I
What
took the
at
opportunity and
university?
went
You
there
mean?
just after uni. Yes.
Right. Right. Awesome. And so you just took the opportunity and went for it.
Indeed, and that was a good
Yeah.
choice, clearly a good choice. And then I went from job to job, and I think it became pretty much clear just before I joined that current fund, DLF Venture, that it was the call for that made it I think a good choice. And again, DLF Venture was I think the perfect opportunity. It was still fairly young when I joined. The fund was created in 2017, and I joined in 2019. And again, it's the most exciting moment to join a company like this, because that's where all of the methodologies put in place, when all of the strategies are set in motion. So it's really exciting to join really the closest to the beginning as possible.
That's why people fall in love with the startup world, right? Because it's that excitement, that early stage time, which is just super exciting. Everyone's got the opportunity to make a real impact, a significant impact on the direction of a company, right? Yeah, that's hugely exciting. So, what is it about aside from the fact that there's the excitement of the early stage piece? What was it about this space as a whole that you think you fell in love with, or decided, it's like, let's forget the food piece for now because that came later, right? But just the venture space as a whole, what was it about that appealed to you? Was it the economic side? Was it the you know what I mean? What was it about that?
Yes, of course, that's a multifactorial topic. I mean, of course,
Well,
there
we've
is
got the time, so go for it.
yeah, we have the time. So to the point, no, there are multiple aspects to it. Of course,
Yeah.
there is the I would say, as you say, planting the seed and seeing companies grow. I mean, I have seen companies in the portfolio going from a couple of millions of euros of revenue to close to 100 million, and it's not only a question of growing in terms of numbers. It's about growing as a team. I also see entrepreneurs grow themselves as persons, which is super interesting. Simply because most of the founders are sometimes young, sometimes less young, but in most cases, it's their first time as entrepreneurs. It's the first time they come out of a corporate environment. And it's great to see them realize what it means and take ownership, accountability of their own baby. I mean, most founders use the word baby when they refer to their project. And it
Yeah.
is really something that speaks to a lot of people. And of course, I mean, I'm not an entrepreneur. I was never one, even if I've been on board as a board director. I've helped startups at a very, very early stage. Of course, I mean, we're not the one putting our hands in the dirt. It is always the role of the entrepreneur. We try to guide them as much as possible, but it's really the possibility to have an impact on that. That's one. Number two is, of course, in terms of financial model, it's dramatically different to any other industry. It's an industry where the returns can, I mean, we say sky has it is the limit, but it's really the possibility to not to make 10 or 15% a year of return, but it can be much more if the success is there. As we say, there are multiple ways when you start a company to think about the horizon that you want to set as an entrepreneur. You can be totally happy and totally fine to build a business that is a few million of revenue, to have a solid EBITDA, and to build on that, to have your own asset, to be in control, and to have a legacy. And you don't have to be a €100 million business to be that. And I think it's the possibility also that opens, let's say, the life opportunities to entrepreneurs to have control on a small pie, to have a bigger part of a really big pie. And I think every entrepreneur has their own, I would say, ambition when it comes to that. It's a life decision to be an entrepreneur. It's not about, I mean, most of entrepreneurs are not thinking about money as the first topic. Most of the time it comes from a willingness to make an impact, something that they care about. They want to help someone they know. Sometimes it's the first bit, especially in the consumer world. Like it's very close to you as a consumer. So you see something that you don't like in an industry, or you see someone around you, like family, a friend, having issues with an actual topic, whether it's health, whether it's nutrition, whether it's travel, for example, like very, let's say, day-to-day topics, and you see them act upon issues and try to find solutions. And that's something that is, I think, really interesting as an investor to see, because, I mean, of course, some people are extremely attracted by the idea of moving billions of pounds of assets in foreign currencies, for example. But it's a very different way of having a, let's say, direct relationship with the ground and with what happens in the life of consumers. So it's really the two main reasons, I would say, are driving us as investors to be, I mean, to be and to remain active in the VC space. It's really the start of a story, and we always want the stories to end up good. It does not always happen this way, of course.
Of course,
but,
yeah.
Even if it's not a success, it's not always a success. I mean, the numbers prove that it's hard. It's hard to make it out a success when starting a startup, and that's why entrepreneurs go at it once, twice, three times, four times, and it's the ability that entrepreneurs, when they discover it, usually even if it fails, they are willing to try again and again and again, and that proves that it's not a question of.
Hi, a friendly reminder to share this episode with your network, like, and subscribe. And if you are feeling really supportive, please consider reviewing the show on the podcast platform of your choice. It all really helps support what we do. Thank you. Now back to the show.
Being the best or making the best returns, but also it's a lifestyle. And I know many entrepreneurs who would be, I think, unable to go back to a corporate life simply because
Myself
being an
included.
entrepreneur is a life topic.
Yeah, myself included, for sure. Yeah, it's interesting, isn't it? That it's you're absolutely right. It is a lifestyle choice. And I've said many times before that I think I'm practically unemployable at this point. You know what I mean? Now that I've worked as an entrepreneur for as long as I have, no one would have me. You know what I mean? Like, what position would you give me? And it's just, yeah, that the purpose piece is really an interesting one, isn't it? You know, like you say, the first sort of driving factor isn't initially money, it's impact usually. Like you say, either on solving a problem for an individual, a group of individuals, or society, you know, which is I think that's a pretty damn good driving force to have, personally. You know, why, you know, there are worse things to be driven by. What is it that you said that the vast majority, obviously there's a lot of failure, quote unquote failure, because I don't really want to, maybe not the best, but because it kind of it has bad connotations to it, right? But why do you think that is? What makes it so difficult?
So when we look at an opportunity for the first time, when I meet an entrepreneur for the first time, we tend to see a lot of new projects every year. Give or take, I probably see 700 or 800 new opportunities every year. I probably talk to, how to say, between 150 and 200 entrepreneurs every year. We always tend to take a very strict methodology, of course, when we look at a project for the first time. We have scorecards. In the back of our mind, we kind of tick the boxes and try to understand what the market is. Is the founder strong enough? what is the actual drive behind it, what is the competition. And of course, it's a lot of factors that we look at, trying to assess what is the probability of success and what are the key, say, flags that could make it a failure. Again, the word failure is hard, but sometimes it is just failing to find something that makes your product or your service to fit in the market, to fit in the consumer expectations. It's what matters in the end. What makes it hard is, I mean, a simple glitch can get the card castle to collapse simply.
What do you mean by a simple glitch? Give me an
A simple
example.
glitch is, I mean, I'm going to talk about what I know, which is products. You might have a third-party producers that simply is not invested enough in what you do, and they get paid, but they have no accountability when it comes to quality. And when the product gets to your consumer, it's not exactly the right specs. Something is wrong. And of course, when you have 100,000 customers and that 1% of the products are defective, that's an issue, but you can overcome it. If it's your only order and that 100% of your customers get a product that is substandard in quality, it creates a massive issue because you only have, let's say, one chance to make a good impression, especially when it comes to your first consumers, which are usually core customers. Like your ideal customer is usually the first one you get because either they are exactly looking for this product, so you come across this customer first. If you fail at delivering on quality from day one, it can be a massive issue. And that's what I call a glitch because it's not always 100% in your hands, i.e. it's you have to rely on a lot of external parties to do your job because most of the time you're 1, 2, 3 founders, and if something happens that is out of your hands and has like I say, critical impact, negative impact on your customer, it can end it all. And it can be a delay, it can be an issue of quality, lots of reasons. A glitch like this can have dramatic consequences. And that's only one part of the difficulty. This is what I call the glitch difficulty. But the other difficulties are simply the ability that you have to pivot. You were talking about the importance of impact, and I believe a lot in this. It's the drive of the entrepreneur that makes him or her willing to spend so much time, so much energy, taking so many risks to launch a product or a service. What can be super hard as well is to realize that your ambition in terms of impact is not exactly what the market wants. You know, sometimes you have this ideal of, oh, my product has to be this, this, and this. My specifications catalog is so long that it's going to be perfect. And if it's perfect, my customers will love it. But sadly, it's not always the case. And sometimes you need to make adaptations. You need to sometimes pivot depending on the feedback that you receive from your customers. And for some entrepreneurs, it can be difficult because it's super difficult to let go of your initial ambition, which
it can be very personal, can't it?
Exactly.
Like you said, it's the baby thing. It can be an insult to some, which is not the best situation to be in.
I think it's exactly what you described. It's really difficult to have someone to tell that your baby is not exactly what the market was expecting.
Yeah. Your baby's ugly. Like no one wants to hear that.
Exactly. And so I think that's one of the difficulties, especially at early stages where you're supposed to be agile. You're supposed to listen a lot to the feedback from your customers, but also from your friends, your family, from potential investors. I mean, and of course, as an entrepreneur, you will be the one like at the forefront of your project. You'll be the first one to talk to your customers, to design your product. So, of course, you should be the one deciding whether you need to pivot or not. But it's really a difficulty sometimes, again, especially in the consumer world where getting feedback is sometimes a bit difficult because to get feedback, you need to sell the product, to get people to try it. It's, of course, a difficulty here. But yeah, it's those type of difficulties that I mentioned as an entrepreneur, and also the main one, which is it's exhausting. I mean, of course, you have the drive, you have the ambition, but it can take more than 1 year to get a product on any shelf or on your website. It can take a few other years to even check whether you have a product market fit. It's a marathon, and of course that's one of the difficulties. If you're lucky enough, you would have a co-founder. It helps. It's just getting in these together. But it can be hard to have the support. I think it's super important to make sure that you have the right support systems around you when you start, whether it's friends, whether it's family, whether if you don't have this, of course, accelerators, incubators can be helpful just to have an environment around you to it's a lot of highs, but it's also a lot of lows. And when you're in the low, you need support. And I think that's sometimes you don't always get the support when you want it. People don't understand what you're doing. Sometimes it's really hard to express why it's hard.
We talk actually quite a lot about that on this show. I say in almost every episode that the topic of isolation comes up at least once. It is such a common theme out of every conversation I have on this show, but also almost every conversation I have in speaking with founders. It's a universal thing, which is hugely interesting for all the reasons you just said. But it's hugely interesting as well what you said about those roadblocks that can make it so difficult and can lead to failure. Because, when I'm quite entrenched, as you know, in the tech startup space, especially sort of as it pertains to kind of IT technology and things like that, as you know. But it absolutely breaks my brain when I try and think about the difficulties of launching the three I believe to be like the most difficult businesses there are, which is hardware. Right. Any form of hardware technology just blows my mind. Right. From like the most simple, we think is maybe the most simple thing, like, I don't know, a video game controller, to a Tesla, like, and the amount of sort of moving parts in something like that is just, it hurts my brain to think about, having to run or launch a business like that. It's just incredible. And then there's pharmaceuticals, drugs. Again, absolutely hurts my brain to think that people have, thought of an idea, researched it, the amount of intelligence and research and just the bureaucracy, involved to get something like that launched and out to the public. And then the other is food and beverage products. Like, again, just the same concept. Like, I just can't wrap my head sometimes around the challenges, the hurdles you have to sometimes go through to get a product from your head into the hands of consumers and on the shelves of supermarkets or whatever it might be. Those things it's super impressive to me. It is just, and anytime I look at a product, I can't help but be, impressed. Just purely impressed that someone thought of this and they actually did it. That's it. I think it's super impressive. I think more people need to appreciate that, to be honest, because it's so bloody impressive. It's so difficult. How does someone go from? No, actually, I'll save that question for in a minute because we're almost jumping ahead of something else I wanted to ask, because it is incredible, and hopefully you can shed some light on that idea, because a lot of people just really, I think, would be interested by that. But before we jump to that, your role then that you have now at DLF Venture, how did that come about? Was that something that you sought out, or was it something that kind of came to you? Because like you said, it is quite a change from the things that you were doing previously. So how did that even happen?
So I invested in startups even before I started joining. Even before I joined the fund. So
as an angel, you were already
as an angel.
Okay.
I grew an interest into that even when I was a consultant. Of course, it's difficult to access the deals. I think the UK obviously is a more fertile ground when it comes to angel investing, simply because the infrastructure is really well designed. I mean, you have platforms. I won't name them. Everybody knows them, but it's easy to get your first foot into that world and to invest small. Obviously, when you're in other countries, especially France or Germany, it's a bit more difficult. But it's something that appealed to me a while back. I think there are some.
What makes it more difficult in those countries? I would have assumed that access to those same sort of platforms and everything would have been the same. So what makes it more difficult there?
I
Is it
mean,
more of the incentives, the sort of government incentives and things like that behind it that aren't there?
yes. First, so two points. First, the government incentive. I think the UK is blessed with the current system, so built around the SEIS and EIS. It makes it simple to understand. It makes it, let's say, cash efficient. Also, it's been there for a while, so there is long-term visibility. I think there is no plan for the government to even touch it, simply because it works as intended.
Let's hope so.
Uh,
Yeah.
the number two is simply those platforms in Europe mostly started with the UK, so maybe it's where the ecosystem is the densest in terms of number of opportunities, number of potential investors. It is changing. In France, typically there are platforms now offering the same services. Those platforms now operate in various countries, so it's possible in one place to invest in different countries, different projects. Also, each of them with their own specificities in terms of tax impact. But it is growing. I think France in the past 2 years has developed there's a much better tools for angels to invest. I think before it relied much more on private angel member clubs, say boys clubs to be very direct, and I think this is changing slowly. And offers the ability of potential investors who are not in those circles to invest as well. Also, one thing that was different is probably the type of instruments. I think the UK has been on equity a lot because SEIS, and EIS are equity driven. I would say in France, in Germany, there was a much more important focus on debt. So the possibility to lend to startups or SMEs, especially in Germany, in France as well. For a long time, it was, I would say, kind of the only ways you could do it in an easy way, and also for smaller amounts. So it's slowly changing and giving the ability to get actual share, actual ownership, which is new. And again, it's developing now in Spain, in Italy. Slowly, it's changing. I think the UK built the infrastructure in Europe, and it has really good spillover effects. I think in the UK now the regulation as well is pretty good. The communication between entrepreneurs who crowdfund and their investors is pretty good as well. It's usually very open. There are forums for discussions, ability to prepare Q&As before the investment, after the investment. I think it's something that is super important with me. I believe a lot in crowdfunding. It's a good way for investors to get exposure to something new. It's of course much easier to raise for consumer startups on those platforms, simply because most investors feel a deeper connection, and they feel they can test the product and have their own opinion on whether it will work or not. But clearly, it's a possibility, and clearly, I think as an investor in a fund, I think having that experience beforehand, so the ability that I had to start investing in startups 8-9 years ago, made me understand a bit better the dynamics. But of course, if you invest as a person, you don't have daily interactions with entrepreneurs. Sometimes never any interaction, so you're in the back seat. It's obviously much more interesting to have, let's say, what we call a strong position on the cap table, simply to understand better the businesses. And also, what is important is the ability to reinvest. I know that some campaigns on those platforms in the UK have had 5, 6, 7 rounds of financing. People like Brewdog, for example, have raised multiple times, and it's the capacity to build a community, and it's the same as for funds. The appetite to reinvest comes with trust and comes with communication, and it's really what is important. Investing one time is great, but building a story of investing 3, 4, 5 times, like we have done it sometimes with some companies, is probably where you can show that the relationship is good and that it's a proper long-term story rather than a one-shot.
But then, what's the end game there when you invest that many times? Presumably at some point you would like your money back.
Yes.
So,
Yes. No, and it's
You can't keep doing that forever.
I mean, some can. I mean,
Really?
I mean, not every investor in VC has an end date. You have lots of what we call evergreen investors who don't have an end date to their fund, and virtually on paper could keep investing forever and larger amounts. Of course, most of the investors have an end date. Of course, as a team, you always have an incentive also to sell and to do this. But
Yeah.
there are two things that are super important, and it's something I tell to a lot of entrepreneurs is the first thing you need to check when you choose an investor, because it's not only investors choosing entrepreneurs, it's entrepreneurs choosing their investor. It's both ways.
Very well
It's simply
said.
to align on the timing. If you have an investor whose fund is 1 year old and has another 10 years, and you tell them that as an entrepreneur, you've been in that company for 10 years and ideally you would like to exit in 3 years, it's an issue. And it can go the other way around. You have funds that are in the end of their life cycle. They might tell you or might not tell you that they would like to exit in 3 to 5 years simply because they don't have the choice. But as an entrepreneur, maybe for you it's a legacy thing. Maybe you want to be able to keep that business forever, to make it a profitable business, make it a cash generating asset for you, for your family, potentially have a legacy for your kids. And it's something that you need to you need to clear the air as soon as possible when you start this dance. I call it this dance between the entrepreneur and the founder. It's super important to check that. But I agree. Most funds need to exit at some point. Entrepreneurs most of the time do want an exit. So it's really something that is key to clear when you start talking to any investor, whether angel, VC, PE. It's a key, especially when you start having multiple investors around the table.
Is some part of having a kind of long-term portfolio company like you mentioned, like BrewDog, investing in it multiple times, is some part of having that also kind of like a bragging rights thing sometimes for that VC, for that investment firm to be able to say, look who we've got on our portfolio, and that can attract other people. It kind of ticks a few boxes. Is there an element of kind of a popularity contest thing there as well, to an extent?
Yes, of course. I mean, ego is a point. I think you also have different type of investors. Clearly, what we do at DLF Venture, we don't invest a lot every year. Like new portfolio companies, 2, 3 every year. We don't expect to invest 5 times a year like other more diversified investors would do. We would rather focus and to invest multiple times. I think it's just a choice that we have, and other funds might have a different perspective on that. Also, it's a question of showing that you are on the market. Sometimes, I mean, I just take an example. You have a fund that is supposed to be multi-channel, so and multi-industry, doing B2B, B2C, doing hardware, doing this, and that, to keep showing to the world that they are generalist investors. They also sometimes need to invest into multiple categories and to be present on the cap table of those companies. It happens. It's clearly something that we would not do in the same way. And of course, there's always sometimes the FOMO is one thing as well. As investors, fear of missing out on an opportunity. Sometimes you have love stories with founders. You're like, oh, I love those founders. Let's do it. Even if we are not a lead investor on this round, even if we are not, we're just following on another investor. But sometimes the appetite for a market, a category, a founder, a product, even, can be so strong that you're drawn into it. And it happens. Sometimes you can try to control it as much as you can, but as an investor, there is always an impact aspect as well. I mean, we not only the entrepreneurs have the appetite for impact, we do also.
I mean, yeah, it's interesting you say that, because there are some startups, some entrepreneurs that just have a gravity to them, right? They start creating a life of their own that just attract at certain points in their life cycle. I've seen that firsthand. Yeah, it's interesting, and What was I going to ask you? You said something there that was really interesting. I wanted to pick up on. Oh God, that's gone from my head now. That's really annoying. But yeah, going back to what we were just talking about a moment ago. Then, so with how difficult it is to just come up with a product. Like I said, it just absolutely blows my mind. Especially, I mean, food is like those three categories I mentioned earlier. They're all difficult for a number of reasons. So technology, supply chain, just incredibly complex. Especially the more complex the product is. In drugs and pharmaceuticals, compliance and the scientific method and everything else there. And food is really interesting because for me, it always, and especially based on my background, I know something about it, being an ex-chef, having studied being a chef in France back in the day in my previous life and all that. I've got a good appreciation for the fact that it kind of sits somewhere in between, actually. Of chemistry and technology. You've got these two worlds meeting. Very much in culinary school in France, we had a chemistry course. That was part of our education. We had to understand the fundamentals of chemistry, and it sits very much in the middle of that. From a tech perspective and from a supply chain perspective, and legislation, legal, the scientific method, everything. So, yeah, it just blows my mind. So, how is it then that someone can, and I think you've got the perfect insight for this to help us understand this. How is it someone can go from sitting at home going, this product doesn't exist, I would love to create that, to actually getting it to sit on your shelf behind you there, or the shelf in a local Tesco or something like that.
Yeah. No, and that's the magic of it. So
it is magic. It is magic.
There's magic, and also, I mean, it's magic or craft, whatever you call it. But
sure.
It's. I mean, I've encountered multiple profiles when it comes to this, and again, that depends a lot on the type of entrepreneur that someone is. I have seen entrepreneurs when they had this realization that there was a gap in the market, that they felt that consumers would want something specific, new. They would simply start cooking or baking or mixing. Or I've seen, I mean, you can now hire or rent a kitchen in London now. I think in White City, for example, you have facilities like this. You go, you pay. It's a bit pricey, but at least you have the right hardware, the right suppliers potentially for ingredients, and you can.
What? So like almost like an industrial level kitchen for hire. You can do that.
Yes.
Oh, really? That's amazing.
Yeah. It's possible.
If you are enjoying this episode and want to support the show, please like, subscribe with notifications turned on, and let us know your thoughts and opinions in the comments below. This lets YouTube know we are doing something right. Back to the show.
Of course, it's an investment, but at least you don't have to buy anything yourself. You can have access to the right hardware. You can simply start experimenting. I mean, I always take the example of one of our brands. The founders created this amazing chocolate brand. They literally started making chocolate at home and starting to understand themselves as founders who were not chocolate makers by trade, to learn what the job was and what is it really to create this product. I mean, I've met people making various sorts of products. It's of course a bit more difficult with beverages because you need a bit more hardware, you have bottling, and that's really a question of formulation and recipe. Even about before talking about let's say health and safety regulation, all of this, it's really about what can be done with my specs, those specs that I have in mind that can taste good, at least to me, and is it feasible to make it for a reasonable price? What are the unit economics that I could create around this? And of course, you won't be able to test every single aspect of your product, like quality to economics, but it's a good way to simply to start. I mean, you have lots of beautiful stories of those 100 million euro brands that started in the kitchen. I mean, I'm pretty sure that even some pet food brands were started in a back kitchen somewhere just to trial and error. That's one way to go, and that's I would say the most common way in terms of volume of entrepreneurs who starts. The other way around is I would say the more academic and institutional way, which are sometimes like second time or third time founders, or people with like extremely high ambition and with an extremely clear view of the gap in the market, where it's not a question of can we do it, but we need to do it and we must do it. And then when you have an ambition like this and a clear vision like this, you can probably put a bit more money on the table. You can plan it a bit more in advance, already work with third-party players. In the same way, I mean, cosmetics is a good example. You have the possibility to work with labs for usually fairly reasonable fees to try formulations and to have a first test. So you don't have to do it in your kitchen. Same with beverages. It's possible to have low minimum quantities, so MOQs to start with. So it's already possible, but you need to have this vision. And then you have the third way, which is, I would say, almost the corporate venture way, which is simply go big or go home, and let's try to make a dent in the market right away and produce really large quantities and try to go after big channels right away. Try to go to grocery, try to convince as many key accounts as possible from day one. And I think
so presumably those three ways require more capital as you go up each time, yes. Right? Yeah.
Yes, and it's extremely, I mean, tightly entwined with your story as an entrepreneur. Of course, if it's your first time and you're just discovering the way it works, it's probably better to go through the first the first group and simply trying to do it by yourself and understand how it works. If it's something that you've seen before, if you've been a food entrepreneur before, or just an entrepreneur in another category, you might have the shoulders and the experience and the network as well, and probably the money as well to start a bit bigger. But I don't think there is a bad way to start. It's simply at some point you need to start. Sometimes it takes more than 2 years to formulate a product. I mean, some products are extremely complex to put in motion. Sometimes it's not. I mean, in our portfolio we have all examples. We have founders who started in the back kitchen. We have founders who started a bit bigger. I think it's a question of understanding what risk you want to take as well, and do you want to test to get your friends and family to confirm your idea, or are you so certain about the market, product, and formulation that you feel comfortable going big or going home?
I'm so glad to hear you describe that, because I think it then makes it not enough people, I don't think, realize, and this is true for any kind of business, I think, that they can actually just start whenever they want, if they really want to. And they can enter into markets that seem, on the outside, if you know nothing about them, almost impossible to enter into. Just looking at just looking at that from the outside, you would just think, I think a lot of people would assume you need to be on the second or third option that you mentioned there, that just doing it in your kitchen. No, of course you can't start it like that. That no one would take me seriously. But I think there's an impatience too. That people don't really want to do the 1 year of figuring out the recipe, the second year of selling on market stalls, the third year of gathering data and information, the fourth year of, you know what I mean? Like there's a certain amount of that to it too. There's a bit of impatience, but I think more than anything, people just don't realize it's an option. Do you know what I mean? Like they've got this idea and they think there's just no way I'm going to succeed at this. That it's all stacked against me.
And also, I mean, I'm talking about the UK specifically because it's my local market and it's what I see. You have lots of opportunities to get support. I'm not only talking about accelerators and incubators, but you also have, let's say, group of advisors that you can find. Sometimes angels are willing to spend some time with you simply because they like your category, they like you simply, and they are willing to help. And then
it's like you recently very, very kindly offered to speak to someone that I put you in contact with to offer just some friendly advice. Like that speaks to exactly that point. People are so willing to help in this industry. It's amazing.
It's a very, very cooperative environment. I can't speak about B2B. I can't speak about tech because I've never been in those worlds. But
it's the same. It's the same. Yeah,
it's probably the same. And food and bev. I mean, I love to. I mean, I think we talked before. I mean, my office apartment is a warehouse.
Oh, we're going to get to that in part 2. I've got questions about that. Don't worry.
Yeah, so it matters to me, and of course I won't like every product or every service that I try, but I think there's, appetite to discover. I think the third bucket we haven't talked about when it comes to potential assistance is in the UK, the grocery players, retailers, are super open to innovation. I think we are
Oh, really?
extremely lucky to have. Again, I read again that a few players, I think Waitrose, Tesco just opened their first cohort for their accelerators for food and bev, or even
Oh, really? I didn't
wellness
know that.
products.
That's really cool.
It's amazing, and of course it's competitive. You need to show your worth, that they need to accept that there is a market for your product. They select, I think, each of those accelerators. Sainsbury's had one for, I think, for a few years at least, trying to get future brands on the shelves. At least there is appetite from retailers to get something new on board, and that's great. Of course, it's difficult. I'm not saying it's a given. You still need to be good at communication, having a good product, to be able to show some traction, whether online, whether, as you said, simply in independent shops, or on stalls outside, going in Victoria Park, selling goods is also a way to get a confirmation of your product market fit. I think all of those things make it that the UK at least gives opportunities for founders to get their products on the shelves. I think even whole food or plant organic have those, sometimes those, I would say, love moments when they talk to you and they say, oh, you know what, let's give you a chance. And that's super important to get this validation. Of course, you need to be ready. It's not something that you shall take lightly. If you accept those types of partnership, you need to understand it comes with commitment. It comes with time as a founder. You need to have the proper resources behind you to be sure that you can deliver, especially if it works well.
Of course. Yeah.
If it doesn't work well, you have less of an issue. But if it works really, really well, you need to be able to deliver. But I would say overall the local ecosystem, and of course I talk about London because it's a microcosm, and it's probably easier to get consumers in London, and it's something that I tell again every entrepreneur in food is you're super lucky to be in the UK, and there are many ways to get consumers to love your product. And on top of that, the Brits are usually really good consumers, open to innovation. I think British cuisine takes a lot of influences, but also when it comes to CPG or services, there is an appetite for risk, I would say, when it comes to new products, which is amazing as a food entrepreneur.
Well, that's because we had many thousands of years of terrible food in this country. So as soon as we had the opportunity, we're like,
I cannot comment on that.
So we were like, as soon as we had the opportunity to trade for spices and things like that, we're like, yes, please, we need flavor. Please give us some flavor. So yeah. Yeah, I didn't realize that. That's so cool. Like that some of these larger supermarkets were doing accelerators and things like that. That's hugely exciting. I can totally see why it would be an exciting space to be in now. It's making me sort of jealous that I'm not in the space and I'm in tech. I'm a bit tired of talking about MVPs and SaaS, especially with my background. Actually, now I think about it, it's surprising that I went into software. But yeah, that's awesome. I've got so many questions I want to ask you about. I definitely want to ask about your shelves and the warehouse that you live in, essentially. But also, I'm really interested to ask about specifically kind of the direction that food's gone in. Influencers who are now entering the market of food now with some recent controversies, with some big names entering into that space. I want to ask you about your thoughts on that, and then also about kind of health and how that plays a big part, because there's obviously a lot of conversation in the mainstream really now talking about how big food companies kind of own pretty much all, there's just a few that own all of these brands, and they're putting various products in in food that maybe aren't particularly healthy for us. So I've got a lot of questions, but we're going to have to do that in part 2 because we've already somehow managed to get through part 1 and we've just started, which is crazy. So yeah, for those listening and watching, thank you so much. Come back in a couple of days, subscribe, notifications, all that, blah, 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 so you can find out about part 2. So that's end of part 1.
Thank you.
Thank you for listening and or watching. Subscribe with notifications turned on to get notified when part 2 comes out. While you wait, please join in the conversation in the comments below.